Mayuresh Joshi also with us. Mayuresh, how would you read into the performance of Yes Bank this quarter? Would you say that at least the fact that there hasn't been deterioration in asset quality, it's satisfactory, or it's nothing to really shout home about and you were really expecting some better numbers?
No, morning, Avan. Largely, I think the numbers have been quite in line in what we were estimating, though the NII growth a little bit below our own estimates. But I think no complaints for the last two quarters and even this quarter in terms of how the asset quality has panned out for Yes Bank. Even in terms of provisioning, I think it is bang in line what we had expected, around 207 odd crores. So I think the credit cost environment that the bank was talking about for the better part of FY17 to stay between 50 and 70 bips, I think with the asset quality numbers that they are posting, my own sense is they might be able to maintain that range. And if they're able to successfully grow their advances at the pace at which they have been growing, my own sense is that the kind of earnings that we are probably witnessing might well continue into FY17. So yes, I think in-line set of numbers, but again, I think quite stable for the third quarter in a row.
This question comes to you, and just taking ahead in terms of the discussion, the advances growth has been robust. In fact, at 33% is the kind of advances growth that they are showing out there. Also, the management, of course, has approval to raise $1 billion worth of capital. Do you think that at least in FY17 we should not be now be seeing the capital raising coming in from the bank?
So again,
Viraj?
The capital raising should be done in this financial year.
How do you see this capital? How do you see the valuation of Yes Bank right now? Do you think that the current price, somewhere around the 1200 odd mark, do you think that that price is itself capturing in a good amount of upside and a good amount of upside in terms of the valuation itself, even considering the capital raising? Or do you think that as and when they do complete the capital raising, there is still more room for the stock to go up?
See, accordingly, as you rightly said, at current price of 1200 rupees, it is capturing most of the positives of capital raising. If I remember properly, in last quarter, when the capital raising was announced, the price on the screen was 900 rupees. So most of the positives of capital raising, just because it's going to raise it at a higher price than the book value reported by the bank. So I don't expect much upside in this bank, expecting the capital raising, which has been factoring in the adjusted book value already.
Mayuresh, what would be your view in terms of the valuations, as well as what do you think that the stock would in fact do over the near term, say 1 or 3 months? Where do you see the stock hovering around?
No, again, largely as Viraj was mentioning, I think the stock probably has moved substantially from last quarter's numbers. And if one really assumes the book value for FY16 at 328 rupees, which the bank has reported, and if one assumes, as I was mentioning earlier, the kind of advances growth that the bank is probably looking at and is expected to remain in those higher digits, my own sense is that you will see expansion in book value happening. But again, on the capital raising front of $1 billion, my own sense it will happen in tranches over FY17. And it will be value accretive to the bank. How much has been captured in the price? I think a large portion would have got captured, both in terms of how the earnings were expected to pan out, as well as what kind of accretive impact it would have on the earnings for the bank going ahead. Again, I think valuations at this point seem to be fair. But again, I think the bank has been performing significantly. So I think we need to understand in the con call the future prospects in terms of how the next few quarters are panning out. We probably might revise our estimates going ahead. But at this point of time, I think fairly valued at around 2.5, 2.6 times price to book FY18.
And Lalita, what would you be exactly watching out for in terms of the management con call commentary? And also, would you be curious enough, or would you have a tendency to in fact go ahead and revise the estimates for Yes Bank looking at today's results?
Even though the results are positive and mostly ticking on all the boxes, we would wait for the management commentary as to how they see the outlook. That said, we believe that stocks like Yes Bank, or for that matter any stock, has to be viewed on a longer term perspective as to how the business is performing and how confident you can be on the sustainability of the earnings and growth for that company. So yes, in the near term, maybe the price might be range bound from here. But on the longer term, we believe that if the current trajectory of management performance continues, the stock continues to be attractive for us, and we'll continue to be positive on it.
Right. Mayuresh, this question in fact comes to you now. I am of course saying that Yes Bank is able to report pretty much a stable asset quality, but we did see good amount of cracks coming in as per the guidance from Axis Bank in terms of their asset quality and in terms of what they have still discussed on their corporate book, especially for Axis Bank. The stress does continue on the iron and steel, power as well as textiles. All these three sectors are still remaining pretty much stressed for Axis Bank. We do have ICICI Bank results come Friday. Looking at both Yes Bank as well as Axis Bank results, how do you see ICICI Bank asset quality could in fact shape up? It is not necessary that they do have too much of an overlap with Yes, but definitely a good amount of overlap continues with Axis Bank for ICICI Bank.
No, again, largely, Poonam, I think the point will be in terms of the kind of outlook that they've probably shared in terms of the book going forward. And again, if one goes by what Axis Bank has done, one really assumes that the provisioning for ICICI Bank would also be at elevated levels, specifically for this quarter and the next. They might recognize a few more assets, as they've been saying and hinting at, over the next 8 quarters. But again, I think it largely depends on what kind of recognition comes through, both in terms of slippages from the declared book, where they're finding it a little bit difficult to comprehend. And again, at this point of time, I think the street is of the belief that even if provisionings are on the higher side for Q1, Q2, things probably might smoothen out in Q3, Q4 in the second half of this fiscal. So I think large expectations getting built in for ICICI that provisioning might be a little bit higher also.
Viraj, a last question for you. What's the outlook on the stock now?
If you are already invested in the stock, you have to keep holding it. For fresh buying, let's wait for some correction. That is my view.
Okay, gentlemen, thanks for joining in and giving us your assessment and views on Yes Bank's numbers. Lalita, Mayuresh, as well as Viraj, good to have you with us. So looks like it can be described as pretty much an inline set of earnings, barring the PAT, which is really surprised on the upside. Not too much of a movement at all on Yes Bank. The stock is just about trying to defend the green line at 1194. But with that, we're completely out of time right here on the show. Thanks so much for watching. Stay tuned for Market Sense. That's up next.